do a credit check and see what type of character you have. They're going to do background checks on you, right? So the 3 C's is what it really comes down to, and you got to nurture them all. And then you figure out which one is your biggest strength, and then you can go with the lender that has the right product for you.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome back to Wealth Strategy Secrets of the Ultra Wealthy. I'm your host, Dave Wolcott, and today we're diving into a topic that every entrepreneur and business owner needs to master: accessing the right capital to scale and optimize your business. Joining us are 2 powerhouse guests, Matt Meehan and Lou, the Professor Rosabianca, seasoned finance and business experts who specialize in helping entrepreneurs secure capital, navigate funding solutions, and implement strategic growth plans. With backgrounds spanning Wall Street, private lending, and investment banking, Matt and Lou have turned their expertise toward Main Street businesses, ensuring that entrepreneurs have the resources they need to thrive. In this episode, we'll unpack why most businesses struggle to get the funding they need and how to fix it. We'll cover the 3 C's of business lending and how to position yourself for the best financing options. The latest game-changing SBA lending strategies, including how to acquire a competitor with zero money down, how smart entrepreneurs leverage capital to 10x their business valuation and increase their exit multiples, and the difference between right capital and just taking on debt, and how to avoid common pitfalls. If you're a business owner, investor, or someone looking to scale up, this episode is a must listen. Matt and Lou are bringing the insider knowledge that the big banks don't want you to know. Let's dive in. Matt, Lou, welcome to the show.
Thanks, Dave. Thanks for having us here today, man. Appreciate it.
Yeah, 100%. Really appreciate you guys joining us today. I know the audience is really going to get some insightful wisdom, really from both of you, not only in terms of your background and your accomplishments and what you've done today, but really how you're helping entrepreneurs today as well, right? And whether that be access to capital, which most businesses out there, let's face it, are undercapitalized, right? And not able to find those solutions to get capitalized, as well as on the strategic side, right? Really trying to grow and optimize their businesses. So I think this is going to be a great discussion. And so, at the start, why don't we kick things off and talk a little bit about how you guys got here? And I know, Matt, you really come from the Wall Street background, right? And we've had some chats on that. So why don't you give the folks a little bit of background on where you came from and how you got here?
Oh man, how long do we have? So yeah, man. So I didn't take your usual path, right? It was a lot of punches in the face, a lot of falling down, getting back up. One day I was working in a diner. A few weeks later, I was working for a company that got bought out by one of the oldest firms in the New York Stock Exchange, right? Flash forward, that was 1999. Flash forward to 2011, I actually went out and I bought a business. I bought a broker-dealer, turned it into a full-fledged investment bank with 4 partners. By the time I left, we had 80 registered reps. That was 2015. They wound up buying me out, and I got in the private lending space and helping small businesses grow, right? So I took all the knowledge and everything I learned on Wall Street and helped, more Main Street businesses, your more mom and pop, salt-of-the-earth businesses, try to get ahead, get loans that they need. Just give them the guidance that I already learned in my prior career, I guess you'd say.
Yeah. Awesome. And how about you, Lou?
Similar story, child of immigrants. And, the one rule in the house was do your homework and do well in school, right? So you kind of get that firstborn overachiever. Went to college, went to law school. I met Matt in the canyons of Wall Street years ago. But we met socially. Back then they had happy hours and, you'd go to the local watering hole and you had a drink or two. And, fast forward, like Matt said, today, our podcast is called The Liquid Lunch, right? Because it's like a throwback to when business was conducted during a lunch meeting or a cup of coffee, and it wasn't on LinkedIn or through some static Zoom call, right? So it was a bit more of a feel-good feeling. And then Matt and I got together, and we realized that it was the classic mathematical formula of 1+1 = 3, and hopefully 4 or 5 sometimes. But the value there is, you take a small business, and a small business owner is so fraught with so many tasks and so many responsibilities, and there's a lot of procedural things that small business needs to do to make them primed to get access to working capital. So that's our special sauce. We hold the small business owner's hand and get them access to the right capital, not capital, the right capital. It's a heavy lift, right? We've got 129 lending partners, but the reason we need those is because no two businesses are built the same. They have different credit, different revenue, different trades. So if you and I walk into ABC Bank on Main Street, we have to fit within their box. You're trying to fit that cube into that round hole. And 9 times out of 10, it doesn't happen. So our competitive advantage is that we have 129 boxes. So you're going to fit into one of them, and it's our job and our advisor's job to find the right solution to help you grow.
Yeah. Well, I can certainly relate to that challenge, right? As not only a business owner, but a consumer. And, being an entrepreneur, every time I've looked for capital, whether it be for my business or whether I'm trying to finance real estate or whatever, it is the most frustrating thing to work with a lender. And that's, you explained it so well, is they just put you into a box. Right? And they have their underwriting requirements and what they're looking to do. And if you don't fit, then, it can be really frustrating, time consuming. It's kind of like going through an audit, right? Providing them with everything. So that's pretty amazing that you're able to try to identify really right fit lending solutions for business owners out there. We do have a ton of entrepreneurs in the audience that are at some, size, shape, and scale of growing their businesses, but everyone is looking to grow their business. And as I mentioned, you probably know the statistics, but that is one of the biggest reasons businesses go out of business, right? Is because of lack of funding, right? I think it's over 90% don't make it the first 5 years. And then the next 5 years, it's 95% of those don't make it. And the number one reason is because they've run out of capital.
I refer to that as that orbital thrust, right? A rocket or a plane needs more fuel to take off than they do once they're gliding. And the problem is, if you don't have the type of business that spills off some cash flow from almost the immediacy, right? So you can bootstrap, you need that working capital to give you that orbital thrust. Then, once you've stabilized systems and processes and sales flow and a pipeline, then you're stable. But how do you get to that point? Which comes first, the chicken or the egg? And ultimately, what does the small business owner do? Well, you take 3, 4, 5 positions and you become the jack of all trades, right? Because I don't want to hire a bookkeeper. I don't want to hire a sales manager. So we'll do everything ourselves. And what happens? The business suffers.
Yeah. Let's talk about the problem a little bit and really unpack that from your experience in working with so many different business owners. When should people consider taking on, right, outside debt, right? Wherever that might be. When should they consider taking it on? What are the right, scenarios or milestones that they should be thinking about before they do it? And contrarily, when should they not be taking on capital?
Well, no, every business should have a line of credit. They should have a line of credit, no matter what, no matter where they are, what they can get, right? Depending on the terms and what's available to a business owner is going to depend on their time in business. And they got to make sure they run their financials right? From the get-go, right? But you should always have a line of credit for that emergency, right? A line of credit is not to be used to take out the whole line and then just make interest payments until the end of the year and they get a balloon payment. Right? A line of credit is to be used and put back, right? As you go, either on a weekly basis or a monthly basis, okay? But having that extra cushion and the line of credit used properly could give you the orbital thrust that Lou was speaking about.
Makes sense.
Yeah, Dave, the sentiment I was trying to share is when you get to our age and you've got a little bit of salt and pepper, it comes with the humility that not every great idea becomes successful, and not every stupid idea becomes unsuccessful. So there's a lot of crazy stories out there. But as a rule of thumb, I like to lean on the following proposition. If you don't have the systems and processes in place and you haven't perfected your product or your service, there's no fire to put fuel on. I always like to analogize working capital as the fuel onto the fire. The business is working, wonderful. How do we 2x it? How do we 5x it? How do we 10x it? And usually you do a copy and paste. And to do a copy and paste, you need working capital.
Yeah, makes sense.
You
Any
know,
other
taking-
scenarios you can think of, or can you give us an example maybe, right, of, one of you, a client? I think that would help make it stick.
One of my favorite stories I like to tell in the office, because we have a lot of young advisors, so sometimes you kind of want to share your experiences through analogy and then they can apply it to their clients, is there's a negative connotation when it comes to merchant cash advances or revenue-based financing, and they're expensive. Okay, but we had a client a couple of years back. He ran a water drilling establishment. And he told us that his greatest competitor, the two of them were like the Hatfields and the McCoys. They were always bidding on the same jobs, and they were always kind of downselling to try to get the job. And for years and years, they were just at it. And one day on a Wednesday, he gets a phone call and he says, "Hey, Joe, this guy was supposed to buy my business. He put together a good faith deposit. He defaulted. I need to make a move, but I need an answer by Friday. I need a deposit by Friday." So he calls us up and he needed X dollars. It was a king's ransom. Now, unless you've got a big fat piggy bank somewhere, I mean, even if you've got a SEP plan or a 401k, it'll probably take 5 days to liquidate that. He just didn't have that liquidity. We got him an MCA, very, very expensive, simply because of the nature of the transaction. It was very quick. He gladly paid that rate because in the course of 2 quarters, he tripled his business because now he had a monopoly in 3 or 4 zip codes. So yes, that cost of doing business was expensive, but the opportunity cost was priceless.
Yeah, we're actually on the other side of that as we run an MCA fund as well. That's just performing super well, and couldn't agree with you more. That right, it's giving access to capital to investors or entrepreneurs that really need capital right up front because of certain circumstances, and they more than make up for the rate they pay and everything. It's just getting access to that capital. It's a good alternative solution. And if you look at the market growth, has really been phenomenal. I mean, over 20% combined annual growth rate, right, the past 20 years in this whole alternative lending space, which I would expect to continue to grow.
Yeah, it's been growing. It's been growing really big. And it started to really take off the alternative lending space when the banks withdrew in 2008. Okay.
Yeah.
There needed to be another vehicle out there for small businesses to get their hands on capital that they needed. And that's when private lending popped up. Now, some of these alternative lenders are awesome, right? Others are brutal, right? Not all alternative lenders are the same. Some are worse than the mafia. But then on the other end, you have traditional banks that, we were talking about earlier. You go to your banker and say, "Hey, I need a loan." He's like, "Yeah, fill out the paperwork and then we'll find out." They don't tell you if you're approved or denied for 30 days. Your banker doesn't want to tell you you're not approved because they don't want to lose their deposit relationship with you, right? So it's where do business owners go? And then you're flushed with all this information on the internet, lines of credit, MCAs. I just need a loan. I want an LOC. So when a client comes to us, our first thing that we do with them is we want to understand what the money is going to be used for, right? And why he thinks or why they think they need as much money as they do, and reverse engineer it to find them the right product. Because, we can do equipment financing, we do AR financing, we do invoice, PO, right? And normally a small business owner just comes and says, "Hey, I need a line of credit or a loan right now." But they don't know the right product or the best product for their situation.
Yeah. Yeah. And I think there's also a huge, lack of education in the marketplace. right? Because a lot of these alternative lending solutions are really new, and business owners just thinking like, hey, can I go to a bank? Or maybe, I mean, I literally get inundated. I must get, a dozen different offers a week that come through text, voicemail, email, funding here. And who can even sort out what it even means, right? Or, where's a business owner really supposed to start?
You're supposed to start with the foundations, right? And the foundations are, I think my partner likes to call them the 3 C's. Matt, you know what? You share with Dave the 3 C's, and then we'll take it from there.
Yeah, so you got to look at every business is unique, like we already said. So essentially what you want to do is you want to look at the strength of your business, right? Here's what lenders are going to look at. And once you know what your strength is, we call it the 3 C's. It's either cash flow, credit, or collateral. You don't need all three to get a loan, but you need at least one. The more you have, the better rates and terms that you'll get, right? So cash flow, the way you manage your bank account, right? That's actually an asset. People will buy your future cash flow from you. It's exactly what an MCA is, right? Collateral, we all know what collateral is. You get a mortgage, you put up the house, the bank actually owns the house, you pay back the bank. You miss your payments, the bank's going to take the house from you, right? And credit. This is one thing that a lot of entrepreneurs have an issue with, and they overlook. They don't nurture their personal credit score. I don't care who you are. I don't care what these gurus are telling you online. Lenders are going to look at your personal credit score. Unless you're Google, don't worry about your business credit. And yeah, they're going to want your social security number. They're going to want to do a credit check and see what type of character you have. They're going to do background checks on you, right? So the 3 C's is what it really comes down to. And you got to nurture them all. And then you figure out which one is your biggest strength. And then you can go with the lender that has the right product for you.
Yeah. Yeah, that's interesting. So one of the reasons, I was excited to talk to you guys too was really, from a wealth building perspective, right? We look at really the equation of kind of growing your net worth. And one of those big components is to actually increase the amount of investable capital that you have. Right. And everyone wants to, try to 10X that. How can you do that? So we have people starting new businesses, side hustles that can turn into a business that can actually create freedom of purpose for them too, and that business that they've always wanted to do. So they're looking for, capital at those places, or people who are seasoned entrepreneurs really looking to, again, 10X their business or grow that business. From kind of a return standpoint and a valuation standpoint of businesses, in your experience, what have you seen with respect to business owners that have leveraged capital properly and then really taken off to the business to, double it, triple it, right, or grow it?
Yeah, I'll just give you an example. So during COVID, we had a client that he owned about 3 gymnastic studios. He came to me. He had an opportunity when everybody was closing the doors and things were shut down to purchase more gymnastic studios. Most people thought he was nuts. He was kind of tapped out at where he was at that time, but we put together a game plan where he came out by the end of 2023 owning 17 gymnastic studios. Now he's breaking ground to build his own new, what would you call it, Lou?
Flagship
Kids facility, right?
It's basically a flagship, a kids emporium, gymnastics, babysitting, party center, bouncy places. But the nice thing about him is you don't stop at the kids level. Then if you see a young person with potential, then they have Olympian level trainers that will take that gymnastics prodigy to the next level.
So he wound up partnering with a very well-known gym, one of the founders there. And the game plan is to bring this facility, not one location, but to build 5 within the next 5 years, right? Then 10, then 20, all around the country. And here's the cool part. He came to us from an email that we sent out marketing-wise. We started out as brokers. Now I'll say we're friends. We actually invested equity in his company, and we've been with him at every level and seen what he does. But the difference is he does the work, right? And he takes accountability for what he does right and what he does wrong, where most business owners have a real issue with that, a real hard time.
Hey, it's Dave Wolcott here. Let me ask you something. Are you tired of the same old financial advice that leaves you spinning your wheels? If you're ready to discover the real secrets the ultra wealthy use to build unstoppable wealth, then I've got something just for you. My new book, The Holistic Wealth Strategy, is your ticket to learning the proven strategies that the top 1% don't want you to know. This book isn't just about money. It's about building a life of purpose, freedom, and lasting impact. And I want to give you a free copy. Visit holisticwealthstrategy.com and get yours today. It's time to level up your financial game and create the future you deserve.
Yeah. And then Lou, I think you had mentioned a trucking company, was it, that had expanded as well?
Yeah, trucking and logistics, for various reasons, have a black eye in the American lending space. Nobody wants to lend to trucking companies. They're usually highly leveraged just because of the nature of their equipment and trailers and rigs. And it's almost like that three-tiered food and beverage system where you see that you've got the distribution, you've got the logistics, you've got the brokers. So at the end of the day, by the time the pennies trickle down to the poor truck drivers, there's nothing left. So they're always getting squeezed. So the trucking space is primed for disruption, but it's got to be done well, right? Because you've got to operate at scale. But to operate at scale, your logistics have to be prime, your credit has to be prime. And, just to lean on that credit conversation from earlier, Dave, when you deal with these lenders, they all have various, if not proprietary, credit rating systems. You've got Dun & Bradstreet, you've got TransUnion, you've got SPSS. But the one constant with all those crazy algorithms is the principal and the owner's FICO score. So there is no such thing as I've got a good FICO. You know what? They could always be better because like Matt said earlier, the better the FICO and the better the credit, better the chances of us getting you a single digit rate. And, and in this market where without getting political over the last couple of years, inflation's been tight, labor's been high, margins are getting tighter. So the difference between 2-3 points on an interest rate could be the difference between having a banner year or a loser.
Yeah, for sure. Well, one of the reasons why I really like that really, strategic thinking, right, in terms of scaling the business, getting access to that capital, and whether you're doing kind of an acquisition, you've got growth, right, those strategies. I mean, that's how you can 5 or 10x your EBITDA and increase, the value of the company and then exit from there. Right. I mean, this is how you can really make big moves on the chessboard. But the capital is a critical component. And I think a lot of people just don't understand what's even possible in terms of, accessing that capital. But once you can get it and plug that in, then you put these pieces together. Right. That could be, really significant in terms of wealth creation.
Yeah, absolutely.
That's Matt's favorite acronym. He loves EBITDA. Matt loves EBITDA.
Yeah, I was with somebody last night that just exited their trucking company construction company, HVAC, at a 16 multiple.
Nice. Wow.
Yeah.
Wow.
And they started the company in 2020. They got bought out.
Matt, what was special about that business that allowed them such a high multiple?
I believe their systems and their processes were in place. They had a training school as a part of it too, right?
Oh, smart.
So where it comes to get somebody to train them on the job, they're making mistakes. They make them go through the school prior to that, right? So they have 30 days in the school. Then they have 30 days. They're making money within 30 days for the company. And so
they created a strength out of the weak link of the industry, because the weak link of the industry is getting trained skills craftsmen today. I mean, nobody wants to go into the trades. And if they do go into the trades, who has the patience to go through like an 18-month apprenticeship, right? So that's really smart.
They created a feeder system for themselves, right? Which was
smart.
That. But also the other way they got there was through acquisitions, right? It's the fastest way to double your business, right? Go out and
Hungry Hippo. Remember that game when we were kids?
But what most people don't realize is the SBA has changed their rules more in the last 18 months than they have in the last 10 years. You can actually go out and buy one of your competitors with no money down, as long as we have the same industry code.
Can you talk about that more, Matt? Let's talk about SBA and what are
Dave,
some of the
listen carefully to these new guidelines. They're going to knock your
Okay.
socks off, buddy.
Really?
Yeah, so the SBA's changes, I mean, we're constantly getting updates and changes, right? So let me take a step back for everybody and just so they understand. All the SBA is a government agency that insures a loan, okay? Now, they have their own set criteria that you need to meet. Then the banks, okay, are the ones that actually give you the money. So Chase, Wells Fargo, Celtic Bank, the biggest SBA lender there is, they have their own guidelines you need to hit, right? So you can go to Chase, you could hit the SBA requirements, but Chase can say, hey, we don't like your business. You're not for us. But I can bring you to Celtic and get you done. Okay. So all an SBA loan is the government insuring the bank against their loss, usually 90-10, right? Which means they give you $100,000. You don't pay it back. It's okay. The most the bank can lose right there is $10,000. So this is why all banks want to push you towards an SBA loan, and the traditional business loan is pretty non-existent these days, right? Because I mean, let's think about it from an investing point of view. If I can insure my money at a 90% loss, that's the way I'm going to go, right?
Yeah.
Now, they keep coming out with new guidelines. It's almost impossible to stay up with, but I was with a banker friend yesterday. They came out with a new working capital line, which is pretty crazy, but no banks are doing it yet because there's not that much money into it for them. But the bigger thing right now is partial ownership, partial buyouts, partner buyouts. In the past, you used to have to buy 100% of a business, right? Now you can go in and use an SBA loan and buy 20% of the business. You're an owner and you have no exit strategy. You want to take some chips off the table. You can sell to your employee with no money out of pocket for him a portion of the business and finance it and get a lump sum from the SBA. Then what can you do with that lump sum? Well, let's face it, 80% of a business owner's net worth is tied up in their business. They have a partner come in, somebody buys a portion of their business, they take the lump sum, they go invest it in a family office, right? To grow their wealth and diversify out, you know?
Yeah.
The last thing somebody wants to do in a case like that is get to the end of the road and they can't sell their business, right? We've seen it in 2020. Companies that were sellable were no longer sellable in 3 months. So your plans got erased, right?
Yeah.
We just watched, NVIDIA lose $600 billion in market cap in one day, right? Because China's got this DeepSeek AI.
You had to bring that up. We couldn't go a whole podcast without you bringing that up.
No, but my point being is anything can change. So why not take chips off the table when you can? And use the SBA as kind of like a mini PE firm, right? Or bring an investor in. That's my point there. You want to go over that?
Yeah. So the key here is experience within that NACE code. So experience in that industry. So you're not going to be able to sell it to the cleaning lady that comes in twice a week. But if you have a key personnel, like a foreman or a VP of operations, or maybe like an estimator, like someone that is privy to the inner workings of the company, 100% financing is available, which has been, it's a no-brainer, right? It's not been on the radar for our products and services in the past decade. Same thing goes for an entrepreneur that seeks to expand geographically, always under the same NACE code. So let's use a landscaper, right? Like I've got a landscaping business. I'm really successful, got my systems and processes in place. But at the end of the day, I probably can't go further than half hour, 45 minutes, because then I spend 2 hours for each job, right? So the only way I can grow my business is if I piggyback and then go to 2-3 zip codes later and do the same thing. So the SBA will allow you to acquire competitive businesses with the same NACE code with 100% financing.
Yeah.
But I've got a proven track record because I'm a landscaper. I know my business. I know systems and processes, and I could 2X it.
Yeah. No, and another great strategy, right? So obviously we do a lot of passive investing here, and one of the great strategies is to either create your own business or acquire another business and then turn that into your passive investment vehicle, right? That provides you income, right, in later years, rather than tie up all your money in the market, as Matt's going to share with us his experiences there. So, that's an important strategy, but using some of these tools like SBA and some of these options, really makes it so much more accessible that I think people don't even realize, the opportunities that they have right in front of them.
Dave, let me mention one more for you, which is even more sexy. This is personally, it's a pet peeve of mine. When I see a small business owner, I insist that they buy their location where the business is located. One, peace of mind, security. And at the end of the day, if you do retire and the business is not sellable for various reasons, at least you've got the brick and mortar where you can get some triple net leases back. The SBA also allows what's called a rent replacement acquisition, right? So if you're paying X amount in rent every month, they're not stupid. They realize, well, you can easily replace that rent with a mortgage payment So why shouldn't you own your real estate? So that triggers two things. Let me have a conversation with my landlord and see if I can work something out. Otherwise, I'm moving, buddy, because I need to build some equity.
Yeah. Matt, you were going to say something?
No, I'll go. I'm just going to add on to what Luigi said. Yeah, if you can own the real estate, it's the old McDonald's model, right? They own the real estate; they were more valuable, right? Real estate's not going anywhere. We just had a client recently that did an acquisition. The acquisition came with a building. He sold the real estate right away because it was worth more. It was extremely undervalued. But who he sold it to, he wrote a triple net lease to himself for the next 20 years. So he didn't have to worry about it. And I think he profited really well. I think he pulled like 7 figures off the table in that transaction.
Yeah. Wow. That's fantastic. And do you have any comments, coming out of the Wall Street industry, building kind of a wealth advisory firm? I know we had some conversations on this in the past, but just, your prerogative on investing in stocks, bonds, mutual funds with conventional financial planning versus, being an entrepreneur, investing in tangible assets.
Yeah, I got a lot. I trade stocks every single day, right? Wall Street is set up for guys like me, or the way I used to be, to make money from your money, plain and simple, right? It's the way it worked. There's a reason right now the private markets are larger than the public markets, and they're going to continue to grow that way, okay? Alternative assets, a lot more people, whether it's PE, it's merchant cash advance funds, alternative lending strategies, right? There's a lot more information available now, and people can actually get control of their assets better than they could have in the past, right? And here's what I mean. If you came to me and you have an IRA with me and you wanted to buy real estate with that IRA, and I was the broker at the brokerage firm, registered, I don't want to lose that money, so I'm going to put you into a real estate ETF. But I'm not telling you can take that money and then you can go do a self-directed IRA and pretty much invest that money any way you want, right? Where you can go and buy land. You can go and buy a house. You can have rental income, right? IRAs and brokerage firms, they pump up the market. I truly do believe alternative investing is going to get bigger and bigger and bigger over the next few years. It's the same reason why we see a lot of companies right now stay private longer. There's no reason for them to go public anymore. The liquidity is not there. There are secondary markets now for these companies that are still not public yet. So that's my thoughts.
Yeah. Yeah. Yeah, we share the same philosophy on that one. Lou, I'd like to go back for a second into, how you really kind of reverse engineer a plan for potential clients, right? If they come to you and they're kind of looking for capital, right? You talked about, say, let's first kind of really analyze the business, understand how they're doing, and they may have some things they need to fix in-house before they, add capital.
Yeah, part of our onboarding call is to go through our mental checklist, right? Okay, so what are you doing for marketing? If it's a product, where is it being manufactured? If it's a service, who's your client base? Just kind of try to poke holes into the story, because I know the lender's going to poke holes. So let me make you poke hole proof by going through our own little audit. And then when we see some proverbial dings, well, let's fix it and prime you. So, for example, let's say you have a business that has poor accountancy. Like my metric is, by the 5th of the month, you should be able to generate a profit and loss and a balance sheet for the prior month. And if you can't, we got to fix this, okay? And forget about heavy debt loads. If there's heavy debt loads, the first thing we try to do is consolidate that debt and try to get you out of that. So first of all, you're not bankable if your ratios are sky high, right? So let's try to consolidate the existing problem rather than adding additional debt service, right? I don't want to be the nail in the coffin. We want to try to help you folks. And through that, we've had to partner with a lot of bookkeepers and a lot of accounting firms, and I had to have a lot of tough conversations, right? Nobody wants to be told that their baby is ugly. Everybody's baby is beautiful, right? So there's a little massaging there. Say, look, your business is great. We just have to adjust it a little bit. It's like that sailboat. You move the tiller half an inch, the whole boat turns, right? You just have to make certain tweaks to make you bankable.
Yeah. And what's the process if someone wanted to work with you guys?
Oh boy, Matt is really, really. Besides being a day trader, he's really, really good at marketing. So he's set up a email marketing funnel. You were on our podcast. You see our podcast. We have the weekly that comes out every week. It's our newsletter. All our advisors are really aggressive on LinkedIn, and we're all doing network. The best way to find us, we're at www.creditbank.io. And you can reach Matthew Meehan or Luigi Rosabianca on all the socials and LinkedIn as well.
Yeah. How about from a process standpoint, though, Lou? Let's say I was looking for, I had capital needs, right? What does the process look like to engage your company?
Besides that initial 30-minute phone call?
Yeah. I mean, how does it work? Do you guys do an assessment? Is there some kind of strategy stuff up front and figuring that out? What does it look like?
Yeah, so I think you're eyeing into our business model. We have a bifurcated business model. We have Shield Advisory Group, which offers the consulting services, right? The advisory work, and that's an acquisition strategy, a scaling strategy, some debt consolidation, and then on the credit bank side, Credit Bank is our classic brokerage firm. So if you need a line of credit, you need a loan, just plain vanilla line of credit. My business is perfect. Everything is fine. I just need a line of credit. You reach out to one of our advisors on Credit Bank and we'll knock one out for you within a day or two. So that's how we've organized our business.
Okay, great. That makes sense. So how about anything you guys want to share in terms of personal productivity hacks or things from a self-improvement standpoint you want to share with the audience that they can learn from?
Be brutally honest with your team, with your partners, and have a thick skin, right? Because if I can't tell Dave that you have a stain on your shirt and he gets all sensitive, well, then he's going to walk around all day with a stain on his shirt. But Matt and I could pretty much tell each other anything. And very rarely do we have to follow up with, I was just telling you for your benefit, buddy.
Got it. Matt?
Yeah, man. You said productivity hacks. I got to give you a new one that I have, and this is a little bit different. So I bought this gum, and it works amazing. It's energy and focus gum. It's called Noro gum, right? 95 milligrams of caffeine. It's like popping a cup of coffee in 10 minutes. So that's a great hack for me, especially when you get to 3 o'clock. Yeah.
Nice. Probably good if you're traveling too and driving somewhere.
Yes,
right?
Exactly.
I've got the espresso machine in the office. I'm kind of old-fashioned.
Oh yeah. Well, of course, yeah. I would expect nothing less from you, Luigi.
Thanks, Dave. I appreciate the dig.
Yeah. No, I have the same. Yeah. How about from a wealth perspective? If you guys had just one piece of advice that you could give the audience in terms of how they could accelerate their wealth, what would it be?
Matthew, by personality, is a lot more aggressive than I am. So he'd have to force me to do something unique like crypto or NFTs or Bitcoin. I'm kind of like the gold, real estate, blue chip stocks. I want dividend stocks. Matt's like, hey, I got this new IPO tomorrow. Let's look into it.
Got it.
Yeah, for me, diversification, right? It's just really what it comes down to. You should have a little bit of everything, but you should also have safe money and some play money. I would say, whatever the amount of money you have, you can put 20% into something that's risky, that has a little bit more bang for its buck if it hits, right? But don't put all your eggs in one basket. Don't go YOLO on the next memes, on the next meme stock or meme coin that comes out. I was talking to somebody I was at an event last night, and he put $25,000 into a meme coin and made 2.4 million in 5 days. I've never heard of it. Wow. It's unheard of. That's unheard of.
Wow. Yeah. Yeah, interesting times we live in for sure. Well, look, it's been a pleasure having you both on the show, and really appreciate your wisdom. And again, just for the audience, just to summarize here, I think this is really some fantastic opportunities to really start thinking bigger with your own business, wherever that might be, whether that's a side hustle for you today that could grow into your complete passion business, or if you already have a scaling business, really really trying to take it to the next level, to increase that enterprise value, right, through access to capital, right, and that opens the door to M&A strategies, roll-up strategies, right, doing exits or creating the business as a passive investment, right, just so many different opportunities. So if people want to reach out to you guys again and learn more and connect with you, if you could give those sources one more time.
Yeah, you can go to shieldadvisorygroup.com. You can go to Credit Bank, that's BANC.io, right? Reach out to us. Our calendar links are on there. You can book a time, and we're on all the social channels, Matthew R. Meehan and Luigi Rosabianca.
Awesome. And the podcast Liquid Lunch, which is a great show as well, very entertaining.
Especially the episode with Dave.
Yeah, for sure. It was a good one. Gentlemen, thanks so much. Really appreciate it.
Thanks to you, Dave.
buddy.
Take care.
Thanks for listening to this episode of Wealth Strategy Secrets. If you'd like to get a free copy of the book, go to holisticwealthstrategy.com. That's holisticwealthstrategy.com. If you'd like to learn more about upcoming opportunities at Pantheon, please visit pantheoninvest.com. That's pantheoninvest.com.